Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 25th, 2025, and we're diving into Alico's fourth quarter and full year 2025 earnings report. Alico, a Florida-based diversified land company, has recently transitioned from a traditional citrus producer to a diversified land management entity. Joining us today is John, senior analyst from Smart Stock Watch, to break down the details. Welcome, John.
Thank you for having me. Alico's transformation is indeed a significant shift, and their latest earnings report provides a lot of insights into how they're navigating this new path.
Revenue and profitability overview. Let's start with the financials. Alico reported a revenue of $44.1 million for the fiscal year 2025, but they also posted a significant net loss of $147.3 million. John, can you explain these figures?
Absolutely. The revenue of $44.1 million represents a slight decline from the previous year, primarily due to reduced citrus production. The net loss is largely attributed to accelerated depreciation and impairments related to their strategic transformation. However, it's important to note that their Adjusted EBITDA was $22.5 million, exceeding their guidance of $20 million, which indicates operational efficiency despite the losses.
And how does the EPS compare to analyst expectations?
The reported EPS was $1.11, which is below the forecasted -39 by one analyst. This discrepancy highlights the challenges Alico faced during their transition, but the company is focusing on long-term strategic goals.
Strategic initiatives and land development. Moving on to strategic initiatives, Alico has been active in land sales and development. Can you tell us more about their progress?
Sure. Alico exceeded their land sales guidance with $23.8 million in proceeds, which is a positive sign of their strategic execution. They're also advancing their Corkscrew Grove Villages project, with a decision expected in 2026. This project is crucial for their long-term growth strategy.
How is their financial position supporting these initiatives?
They ended the fiscal year with $38.1 million in cash and reduced their net debt to $47.4 million. This financial flexibility is vital for funding operations through fiscal 2027 and supporting their high-value land development projects.
Citrus operations and market conditions. Let's discuss Alico's citrus operations. How did they perform this year?
Alico harvested 2.3 million boxes of fruit, a 25.9% decrease from the previous year, primarily due to Hurricane Milton. Despite this, they benefited from a higher average price per pound solids, which increased to $3.66, thanks to favorable contracts with Tropicana.
And how did this impact their overall citrus revenue?
The citrus division generated $41.3 million in revenue. While the production volume was down, the increased pricing helped mitigate some of the financial impact, showcasing Alico's ability to adapt to market conditions.
Operational efficiencies and future outlook. Looking ahead, what are Alico's plans for the future?
Alico is focused on optimizing their agricultural leasing programs and maintaining rigorous cost controls. Their strategic focus is on land development, particularly with projects like Corkscrew Grove Villages. CEO John Kiernan emphasized that Alico is well capitalized and strategically positioned for sustainable value creation.
What does this mean for investors?
For investors, Alico's strategic transformation and focus on land development present potential long-term growth opportunities. However, they should also be mindful of the risks associated with such a significant shift in business strategy.